Welcome back, everyone. Today we are tackling something absolutely vital for anyone serious about the market: how to actually navigate the Bitcoin cycle using a real technical framework. The mission today is to pull out the map itself, the core strategy, the philosophy that lets you navigate smartly, even without those premium specific numbers.
And that's what makes the difference. If you just chase numbers, you're always reacting. But if you understand the structure, the rhythm of the market, you start anticipating.
Okay, so let's start right there with structure. When the source material talks about market structure, what are we actually looking at? What are these zones that Bitcoin seems to respect?
It's all about patience. The key insight is that Bitcoin's price action isn't random. It consistently reacts to these specific long-term zones. These are areas we're talking about that have been tracked for months. They represent historical points where a ton of capital either piled in or cashed out. They're high conviction zones.
So a place where serious money made a serious decision.
Precisely. But what really drives the action within those big zones are the smaller turning points. The source calls them intermediate highs and lows.
And why are those so important? I think the term used was magnets for price action.
That's a perfect way to put it. They're magnets because that's where the liquidity is. Think about it. Just above a recent significant high, what do you have?
A whole bunch of stop losses from people who are short.
Exactly. A massive cluster of them. And below an intermediate low, you have all the stops from the longs. The price isn't just seeking a number, it's hunting for that liquidity.
It's looking for the fuel it needs for the next big move.
You got it. So the structure gives you this blueprint. You stop trying to guess every little wick and start understanding the pressure points you can anticipate instead of just gambling.
That makes perfect sense. And it leads right into the next big idea from the source, which is this concept of sequencing, the X before Y idea.
Ah, yes. This is where it gets really strategic. X before Y is the idea that certain market moves, let's call them X, almost always happen before the bigger, more obvious swing, which is Y.
So X is like a prerequisite.
It is. It's designed to shake everyone out.
To liquidate all the latecomers who put their stops too close.
Exactly. It cleanses the market.
Yeah.
If you don't know the sequence, you panic sell at the exact moment you should be preparing to buy.
So knowing the sequence is almost like a tool for emotional control.
That's it. You see a sharp drop, not as a catastrophe,
Yeah.
but as a potential necessary step X. It lets you act intelligently when everyone else is reacting emotionally.
Which brings us to really the most important part of all. Risk management. All the technicals in the world don't matter if you get this part wrong.
Couldn't agree more. And the guiding principle from the source is simple. These reports, these ideas, they are guides, not guarantees.
They're not scripture.
Not at all. The market is human. It's irrational. Price isn't always going to hit your exact target on the exact day. So the first practical step is you have to keep capital ready.
Dry powder.
You need that dry powder.
Yeah.
If you're 100% all in, you have zero flexibility. You can't act. You can only hope. And the second thing, and this is crucial, is to avoid over-leveraging.
Because it kills your time to think.
It vaporizes it. With high leverage, every tiny move feels like life or death. It forces you to make emotional, survival-based decisions instead of smart, structural ones.
So it all comes back to respecting the structure.
It does. It means your exit plan is based on a real technical reason, like a break of a major support zone, not just an arbitrary dollar amount. You learn how to ride the cycle with all its volatility instead of fighting it.
What happens when Bitcoin just kind of goes quiet?
Yeah, that's a classic setup. When Bitcoin starts chopping sideways after a big move, capital starts looking for action. And altcoins, they often take the lead. You see these short, really powerful bursts.
The FOMO kicks in hard.
It really does. And that's where the source gives a critical warning about front-running these moves.
Meaning you jump in too early, based on just hope.
Exactly. You're buying into a rally that is incredibly fragile. It's totally dependent on Bitcoin staying asleep. If Bitcoin suddenly wakes up and makes a move up or down, doesn't matter. Those altcoin gains can just vanish instantly.
Wow. So you absolutely have to know the Bitcoin macro picture first.
It's the only way to do it safely. Otherwise, you're not investing, you're just gambling on a rotation.
Okay, let's get tactical for a moment. The source had some specific thoughts on December. What should we be preparing for?
December was described as interesting, but the main takeaway was slow but steady. So we're not expecting some massive explosive move. It's more of a grind.
A grind in crypto usually means chop, right? Sideways, frustrating action.
Precisely.
Yeah.
A lot of volatility inside a defined range. But that chop is actually an opportunity for careful strategic accumulation. It's a sniper's market, not a machine gunner's. You have to be selective.
So this all ties back to the final lesson, doesn't it? Mastering your own execution.
That's the whole ball game. All of this information, the structure, the sequencing, they're just tools. They're not a magic crystal ball. They're meant to teach you how to think.
How to build your own conviction so you're not swayed by fear or greed.
Yes, the goal is for you, the listener, to become the master of your own execution. Internalize the framework so that when the market does something surprising, and it always will, you have a plan. You respond intelligently, not emotionally.
We've covered a ton here, the core philosophy of using structure, sequencing, and risk management to stay grounded.
Right. So if market structure is the map and sequencing is your path, the real work starts now. And I guess the challenge for everyone listening is this. What is the one specific non-emotional rule you are going to implement today? A rule that forces you to respect that structure, even when things get volatile. Because making that rule and sticking to it, that's the difference between just having information and actually being profitable.
The perfect thought to end on. Stay smart, stay patient, and keep that strategy sharp. We'll see you next time.